Hello and welcome to a very, very special episode on this channel. The idea when we started this channel was always to learn something new. If you see, that is one pattern that exists in everything we do here, whether it's quizzing, whether it's anything else. The idea is to create awareness, learn more things, etc., etc. And one aspect of our life that I genuinely feel that we need to know more about, and that's also basis the conversation I have with my friends within comedy, outside comedy, is what to do with money and what to do with wealth, and a very, very important part of wealth and money. Every conversation I ever have, sometimes we stumble upon something called insurance. Okay, insurance is a word we have heard right from our childhood, from TV ads or from our elders, and then we became elders, and then we had to take insurance. And it's always a part of our conversation whenever we talk about money. I was recently talking to a few friends of mine, and we were talking about buying a house. Again, something not to do with insurance, right? And then the wealth manager there was, let's start with insurance. And I was like, "Yahan bhi insurance kaise aa gaya?" So insurance typically becomes a part of our life in every sense. And as you grow old, different types of insurance start entering your life from here and there. And there are so many jargons around term insurance and general insurance, blah, blah, blah. And then Rohan and I were talking about it recently, and we realized, man, we need to know more about this thing. And then it occurred to me that I have a friend who has, I can't compare anyone else amongst many, many people that I know who comes even remotely close to the wealth of experience that this person has when it comes to insurance. We used to be colleagues back in my banking days, and now he has his own startup. We'll talk about it very soon. So Rohan and I thought we'll talk to an expert and clarify all our doubts. So let me call Rohan first. Rohan, please come.
Hello. I'm very
Rohan,
excited.
are you like, what kind
I
of
am financially illiterate, and I'm
yes,
basically the sort of person who I have people that I trust and people whose intelligence I trust about this. And I'm like, bhai, tum log batao.
yeah.
Because left to my own devices, I would be on the road.
Oh,
When it comes
perfect.
to money, I'm the world's worst gujju, I always say. Like एक नंबर का नास्तिक गुजराती, कुछ नहीं आता, सिर्फ पूरा क्रिएटिव साइड में गया, बाकी कुछ नहीं है. तो very
Perfect.
excited for this opportunity.
Perfect. So both you and I will then the
मस्त.
as they say, like
मस्त.
पूरा
यस
निचोड़ लेंगे
यस
whatever.
पूरा निचोड़ लेंगे. आज 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 वो क्विज हो रहा है जहां एक्चुअल लाइफ टेंजिबल आउटकम होगा.
Okay, on that note, we have found a person that both Rohan and I will nichodify to learn
फुल्ली.
everything about insurance. Give it up for Vaibhav Kathju. Vaibhav, co-founder, CEO of, in case you haven't figured out, Insurance Padosi. Vaibhav, so nice to have you here on this channel. As you have already seen, Rohan and I cannot wait, given the background of extreme financial illiteracy that both of us possess, to
Yes.
just take your brain and then
Yes.
but obviously the larger idea is whoever is watching it will also learn something about insurance. So I want to start with very basic, Vaibhav,
Yeah.
before
Anji,
I
yeah.
also ask Rohan to ask a few things. Vaibhav, let's start with basics. Like, what is this? What is insurance? What is life? What is term? What is health? What is general, and etc. etc. Let's start with the basics.
Very interesting. So let's start with absolute basic. No life, no general, no health, no nothing. What is insurance? Insurance is nothing but three of us, for example, sitting together and pooling our risk. So today you are going to do a show in Bombay and Rohan is supposed to do a show somewhere else. Whatever shows I have attended, and I'm talking your language so that everyone understands, there are 6 or 7 participants who come together. I've seen open mics and things like that. The advantage of having 7 people to perform is, let's say someone is running late, someone is unwell, the show will still go on. But if it's only a Rohan Joshi show and unluckily Rohan is unwell, the show gets disrupted. And that's what exactly insurance is. That 7, 8 people to start with. It was actually started in a village where the village came together and they made sure everyone contributed so that funerals would take place in the right way. That's how insurance started. And that's exactly what insurance is. Now, as time went on, things got evolved. There's life, there is non-life, there is health, to a certain extent where you can get events insured. So insurance is nothing but making sure that all of us come together, pool in some small money, and make sure that that rainy day, there is one umbrella between all of us. Whosoever wants to step out can use that umbrella in a very simple term. I hope that answers, KB. Keeping it as simple, as non-jargon filled as possible.
Okay. Got it. So I know life insurance because I have financial wisdom, and I've also seen a lot of Bollywood movies where people are killed for their life insurance, which is like source for everything. And so one question I have straight away is like, is this a thing where people are like, क्या फायदा लेके ये इंश्योरेंस जब क्लेम करने का टाइम आता है तो ये लोग देते ही नहीं है. So what are things, say, like simple question is, I have an insurance for something. What do I need in order to say claim that insurance? Like just a couple of basic things I want to know.
Very interesting question. So first of all, Abbas Mastan has done a lot of advantage, disadvantage, whatever. And so did Oh My God did. But very important fact, which is to be super important, Rohan, is making sure of two things. One, you declare everything in utmost honesty. A lot of us, not the three of us sitting here, but a lot of us in the market, when they fill the form, they think we can do a half truth. I smoke, but I smoke, let's say once a day or one packet a day. I may not give the right numbers. I am a social drinker. I may not declare that, thinking I'm just a social drinker. But all these things impact your lifestyle, your health, your overall well-being. So whatever is the fact, be, as you say to a doctor or to a lawyer, be as naked as possible. So is the case for insurance. Give an absolutely correct answer. So sometimes when we are sitting with the agent and getting the form filled, or with someone who's close to us, we may not want to declare our actual thing. So please do not do that. So that is one thing. A second is, very importantly, whatever is there in the form, one needs to fill on your own. A lot of people come to you, be it a bank, be it an agent, and they say, we'll fill form on your behalf. And KV and I were together at a bank at one point of time, and we saw the relationship managers filling the form on your behalf. They fill questions according to what they think your lifestyle is, which they would never know. I have a first-hand experience. I was at a bank way before meeting KV, where our managing director of the bank, his form was being filled. Now, a relationship manager is 8 or 9 level below the MD. He would never be in a position to ask the MD, please fill the form on my behalf. And he filled everything good. My MD is absolutely healthy. He goes to the gym. When the insurance came and the MD got violent at him because he had got diabetes, and the person declared that there is no health issue. So luckily he read, because being a senior banker, he knows the importance of reading all the documents. That's a very important thing. One, declaring whatever you have, whatever your lifestyle is, and two, making sure you read what you are signing. So those are the two very important factors to make sure the claim is not a problem.
Cool. So while we're actually on this subject, this one technical phrase that has been explained to me multiple times, hopefully you can explain to the audience also. What are pre-existing conditions and what are things that you should absolutely declare? Because this is, especially in medical insurance, it's a phrase that comes up a lot, pre-existing conditions.
Awesome. I love talking to smart people because they make my life easier. The question
people who know, dumb people who know smart words, sir. There's small difference.
Okay. Okay. The smart questions are coming my way.
Okay.
Yeah. So pre-existing ailments or pre-existing situations are situations which a normal, healthy individual may not have. So for example, when we were starting the recording, I checked with the team if my breathing was having some kind of issue, because I breathe in a slightly different pattern than average individual breathes, because right now I have some viral and my nose is obstructed. Now this is a temporary thing, because viral or nose blocking is a slightly different thing. But one may have ailments like diabetes, hypertension, overweight, or a lot of sleep disorders and things like that. Anything which a person who's born with is known as a congenital disease, or anything which a person develops over a period of time, that is known as pre-existing condition. It need not be an ailment. It can be just a condition. The reason is you may not be taking medicines for something, but one may have. So very simple example, knock knees. Knock knees is a particular way at which angle of knees is. That's an important thing. No one takes medicine for that. It's not like a diabetes or a hypertension, but it's a pre-existing condition. So one needs to declare that. That's what your question on pre-existing disease or ailments or conditions. So these are the words one has to look at. And what was your second question, Rohan? Sorry.
No, it's that only. And then can sort of insurance, in a sense, can a claim be denied on the basis of, say, so to approach it in one way is, supposing hypothetically I have diabetes, right? And I have,
Right.
say, a life insurance or medical insurance related to it. But now, say I pass away or I go to the hospital for a particular reason. Can they turn around and be like, oh, well, this is diabetes related and it was a pre-existing condition, so your claim is not valid? Or because see, today, if I have diabetes, I could pass away from 100 different things, right? Related
Correct.
to lifestyle complications that arise from it, etc.
Absolutely.
So then would, say, the insurance agency be able to turn around and be like, पर actually ये heart attack हुआ क्योंकि मतलब ये पहले से diabetic थे, तो अब the claim is not valid, etc. Sorry, that's a stupid question, but that's something that I do wonder about. Right?
That's a very, very, very important question. It may be stupid for people who do not understand, but it's a super important question, because ultimately, why do you take insurance? So that in time of calamity or time of crisis, money comes, whether you are there, you're not there. If somebody has diabetes, if somebody has hypertension, if somebody is a smoker, there are multiple things that may lead to something else. So somebody may have hypertension, which leads to stroke, which may lead to heart attack. Somebody is diabetic, which may lead to liver failure, kidney issues, things like that. If there's a correlation established and it's not been declared, then it will definitely be denied. Therefore, I said sometime back that please declare whatever it is. It's better to get a decline. So what happens is, once you declare the ailments, there are three things that may happen. Either the insurer may decline, sorry, I cannot take your risk. Second thing may happen is they may say, I'm charging you 100 rupees as a standard life, but I may charge you 120. Fair enough, which is known as a rate up. Third is they say, okay, I know I already estimated that kind of ailment at your age, therefore I can take you at 100. These are the three things that may happen. All three is best to know beforehand. At the time of claim, running around pillar to post is a bigger issue.
Got it.
So, well, I wanted to now sort of summarize what has happened so far, especially from the view of somebody who's buying insurance for the first time. Because a lot of our audience would be that kind of audience, and also we've all been through that phase, particularly during our first job when we first thought, okay, insurance lete hain. So one thing I've learned so far is that you need to be completely honest when you fill your form. Secondly, like declare everything and all that. Go through all the documents that you ever sign. That should be a rule in life, but particularly
Yes.
with finance and
Yes.
insurance. And now I want to ask, is there any other tip that you would want to give to a first-time insurance buyer? And second thing is, can you just tell me, because we keep using these words, what is life insurance, what is term insurance, what is health insurance, and what is other insurance? Just like a summary, so we all know what we are talking about. Yeah.
Done. So first-time insurance buyers, a lot of your, because I have a lot of friends who follow your quizzing and things like that. So I know most of the people I have spoken to are corporate employees, youngsters working in different organizations. A lot of them bank on their employee insurance. So I'm working in A bank, B bank, A tech company, B tech company, whatever. My company is providing me insurance. Therefore, I don't need to take. Now, I wrote a post on LinkedIn yesterday. Those insurances are like Thakur. They have good intent. They are there, but unke haath kate. They come with a lot of limitations. There's a friend of mine who fell off the train in Vashi when KV and I were together. Luckily, the train was static. Rohan, Bombay trains, even in a static train, you can fall because people generally
just overcrowding. Yeah,
absolutely. And he fell and he broke his little finger, which was a 20-minute to half an hour kind of a surgical treatment that was required in a hospital. But because he was banking on his corporate insurance, he had to get overnight hospitalized because that was the Thakur ke kate haath. You could not take a day procedure in it.
Got it.
Now, the bigger problem for getting hospitalized, and hopefully no one gets hospitalized, is you need a dependent to sign a declaration that it's okay. He is a bachelor, family is in Nagpur. The auto guy who took him to the hospital had to sign the dependent sign. And luckily, the auto guy agreed. A lot of strangers will not agree to sign on your behalf because it's an indemnity they are signing on.
Yeah.
If you are a corporate employee, yes, it's good to have a corporate insurance, but please have your own insurance also. And that's when what you should look at, now coming to KV's question, is at your lifestyle. So Rohan, KV and I, although KV and I were friends at one point of time, we worked together. Because our lifestyles were different, our family situations were different, our age was different, our product fitment would have been different.
Right.
We have to look at what product features are important. That is something we have to be very careful of. I'll discuss about what we are building on it later, but please be very careful of the features that your profile would need. So what we need to look at is our own profile that requires and what are the features we need. Super important. I'm just doing a shout out to 2 features which are very critical. A lot of other features are there, but 2 shout out features for health insurance specifically are there should not be a room rent cap. That means that if you go to a hospital, it should not say that only 5,000, 6,000, 8,000 should be a room rent cap. And 2, daycare procedures should be covered, which I was talking in this case. These are the 2 shout out features. And KV, you had also asked about, so term insurance is absolutely nothing but a vanilla life insurance. Mr. A buys, Mr. A dies, Mr. A's nominee gets the money.
Okay.
Health insurance is Mr. A with family, without family, can take a health insurance, hospitalized, takes treatment is covered. General insurance is the 3rd category. General will be everything which is not life and health. Actually, health is also part of general. But if I keep health aside, anything, be it motor insurance, pet insurance, marine insurance, your cargoes moving from one to the other is also part of marine. Your building, structure, fire, theft, burglary, everything is a part of general insurance. So, for example, if there's a famous actor, don't want to name him, he's got his butt insured. One of our legendary actor star has got his voice insured. These kind of insurance will fall under general insurance.
Got it. It's okay. You can say my name, Vaibhav. I mean, it's I got my butt insurance. What do you want me to do? I did it now.
Yeah, and I got my voice.
Oh.
I don't know about but voice definitely needs.
Yes. It's interesting that you have voice insurance, KV, when my butt insurance could also be called Beautiful Crack.
In that voice. Beautiful. Okay, Vaibhav, now I want to talk slightly steer from first-time buyers to insurance buyers at any life stage. As we all know, first there are some sort of first-time buyers, first job, maybe early 20s, etc., etc. Then you have a family. So, and then your life stage changes, everything changes. Then you start approaching 40s, etc. And then you already start thinking of retirement. When, some of us can be like, I want to retire at 50 and travel the world. Some of us can be like, I am never retiring. I'll work all my life. So everyone goes through different life stages, etc. I wanted to know your input as an expert. At every life stage, how do you think insurance needs change? And what are the things that we should keep in mind with every life stage?
And to sort of add on to that, as you change insurances at different life stages, how do you ensure that, you're just not stacking one insurance on top of the other? So you were paying 2 premiums, now you're paying 4 premiums, now you're paying 8 premiums. So should you be taking, say, shorter 10 years at a time so that things are expiring, lapsing, and then you're changing them? So I guess,
yeah. Awesome. So life stage insurance, KV, Rohan, is very important. I generally recommend everyone that 2 to 3 years, not more than that, one should quite quickly review. If you are a person looking at equity, don't you look at it daily, how the market is moving. Similarly, your life stage changes every 2 to 3 years. Sometimes it may change in next maybe 15 days or a month if you get suddenly married or whatever the changes happen. But even if there is no life change, which is a marriage or a child or something, still your incomes and other responsibilities and people around you change. So every 3 to 4 years, one should look at inspecting what their insurances are. Certain insurances on the general side, which is motor, fire and everything, actually get renewed every year. And these, thanks to government push also, you look at it every year. So I'll leave them aside. I'll stick to life, health and pension, which is more of a option of buying and not a regulatory push. These are things one should look at every life stage. I was 24 at one point of time. When I was a bachelor, I was single, I was living a different lifestyle. I definitely would have required still a health insurance. There's also a big myth for youngsters, especially who are in their 20s and maybe early 30s who have not got married, that if I'm single, why do I need a term plan? For whom would I need a term plan? The point is, if you're 26, 27, and if you plan to get married, so somebody who's 26 and is very sure, or maybe someone who's 36 and very sure doesn't want to get married, separate story. But you're 26, 27, not married today, planning, maybe, 6 years, 8 years down the line, I'll get married. If that is the case, take a term plan for yourself right now, because one, you are healthy today. Whatever your health condition is in 2024, I can promise you, I can guarantee you, would be equal or worse in 25. It can't improve. That's how human beings are. We only, go down the hill. Two, once your age is 24, again, next year it'll be 25, 26, 27, your premium keeps increasing. So if you buy at 27 today, at 28, your premium would be more, and it would actually be a hit for your finances. So a term plan gets locked till the tenure. So today, let's say you are 30 and you buy it till the age of 60. The next 30 years, your term plan is locked at, let's say, 20,000 or 15,000. At each and every year, it will be the same. If you buy it at 33 or 34, one is your health may deteriorate. Two is your cover premium will increase. So buy it today when you're healthy, when you're young, even if you're single. I'm planning to get married, planning to settle down in life and create a family. When it comes to pension, it's super duper important to start planning. And this, although I'm representing insurance industry, I would say don't look at pure insurance alone. Look at equity, look at FD, look at mutual funds, look at gold, look at real estate, whatever is your risk appetite. Someone like me doesn't like equity. I prefer my FDs and real estate. Someone I know in my organization, my other co-founder, does a lot of equity. So that's his choice. Along with that, what we recommend, you can look at pension funds, which are slightly more stable, slightly less risky, because today at 28, 35, you can still take some risk. At 55, 60, you do not want to take that risk. So if there is some corpus kept in some pension funds which are less risky, will give you some kind of a stable return, which is slightly better than an FD and the risk appetite of an FD. So that's what we look at. Another, Rohan's question was super important of, buying 10-year policies or one policy in a go, or maybe being in a situation where you have got one thing covered in multiple ways and you're wasting your money. I met a customer in a village near Anand, and Rohan being a Gujarati, which he mentioned. Gujarat is a beautiful state when it comes to insurance. You learn so many good and bad both sides of practices. This gentleman had got, KV, can you believe it? 128 life insurance plans running. From 10,000 rupees, 50,000 rupees, 40,000 rupees, because he had this concept कि कोई भी आता है तो उसको खाली हाथ कैसे भेजूं? So I would buy something. And he kept on buying. And I'm talking of 2009-10, when I was in a different company before we met. And at that point of time, I met him and I spent around 3 to 4 hours only making sure all the files could be read. Reading 128 policies, which is one is maturing in 1 year, one is maturing in some other year. And a lot of them were actually getting lapsed because he did not remember also when to pay the premium for what.
Correct.
Yeah. And this is not a time where there was a cred or there was an app which would send a reminder, please pay or premium. So it's super important to be judicial on what you buy, Rohan, KV. Always buy your insurance today, thinking about next 40 to 70 years. You have to look at some kind of plan that, yes, today my need is this. I should take it for 40 years, maybe 20, 30, 20, 35. My need is left for 25 years, but my income levels, my personal life and things have changed. I need to take additional. Never take 10-year policies, because after end of 10 years, your health, your age, everything would have deteriorated. It would be very difficult to buy something new. Take as much you can for a longer duration, but don't overkill it also. Reason being, a lot of people and banker friends of mine, luckily, whatever, most of my friend circle is banking fraternity because I spent 20 plus years there. Problem of bankers is they think they are very smart, especially when it comes to number and money. But they are not, because most of them sit in front of customer facing things. They are actually nothing but, with due respect, I hope no banker dislikes the statement. Most of them are ultimately salespeople.
Hmm.
The smart people are the actuaries or people who are sitting in the treasury, which is not more than 1 or 2% in this fraternity, who are doing the product pricing, who do all kind of risk calculations in all kind of combinations. So actuaries who have priced the product will always make sure that insurance company is making money. It's like when you go to the casino, it's the house that wins.
Yeah.
So always remember, in insurance you buy for covering your risk, it's not a game to play like a bookie would play. So take insurance, specifically term insurance, till the age you think you will be earning. There are products in the market till 85, till 100. A few of my friends said, no, we'll buy because one day we have to die. Therefore, it's a transfer of wealth for my future generation. They don't understand the premium gets jacked up. That premium difference could have been invested somewhere else and you could have made more money.
Got it.
That's what I would say. So KV, you can sum up much better because I have written a big long essay on Rohan Joshi's question.
No, matlab, I understood how.
Yeah, just to summarize, is basically take it at a decent term where you can reevaluate it at a regular interval, but don't take it for such a short term that you're going to have to every say 5 or 10 years as your health deteriorates, take a new plan with higher, possibly higher, tougher premiums, or even chances of essentially not getting covered as your health deteriorates. And ideally sort of take it for a term where, like, that one very important thing is that an age at which you'll be earning still to be able to pay those premiums and then be able to get that recovery, as opposed to scrambling to pay it at 80, 85.
No, Rohan, I'll just add to what you said because you heard it from a customer's perspective and I'll tell you from a product perspective. What I meant was, and whatever I'm talking right now is with respect to term or a life insurance, basically. Not about scrambling to pay, but it's about if you're not earning, you should not take it, because term insurance actually is a salary or a earning replacement tool. Mr. A, who's earning X amount every year, would be earning future money in coming years. If something happens to Mr. A, that future earning is replaced by term.
Right.
People take that even if I die after my retirement, at least some money will come. That is not the way to look at term. That's the way sales is dubbed for term. As a good, sensible person, look at term as a replacement of your income. Income need not be only salary. It could be any kind of income that you are generating in your presence. One catch in this, so that everyone who's listening to this understands, these points which I've said for long term, everything is for life. Health is a 1-year contract, at most a 3-year contract. You have to renew every 1 to 3 years, whatever you take. You cannot take a 10, 15, 20-year term. Health.
Since you mentioned, say, as a customer and as the way they're designed by people, I guess one question that I have is, how do you avoid being misled by sort of insurance agents? In the sense, and I want to be very clear in case there are any insurance agents watching, I'm not suggesting that you're out to scam us or anything like that. But you obviously are getting in there with, like you said, you are a salesperson, you want to put essentially the highest possible product in front of me as possible. How do I, as a customer, safeguard my interests from these agents and say, just watch out for that healthy compromise where I am getting what I need as opposed to just what that person is trying to sell me? And are there any red flag sort of words or phrases that I can look out for that can protect me as someone buying insurance from, say, an unscrupulous agent in case I should come across one like that?
Beautiful question again. First, not because agents or people who are watching may be agents, but most of the agents outside are decent people, don't want to missell. Even if a lot of cases are missold, it's because people who are buying don't know what they need. So even before you meet an agent, my request to everyone is, please do your homework on what your need is. You may not know ABC company's product, which is fair, but because a quick question to both of you quizzers, any idea roughly how many health insurance products are live today according to IRDA in India?
15,000.
Not a bad guess, although too much, but not a bad guess.
Okay, please.
It's around 1,800 plus.
Okay.
Yeah, but why I said this, because when I was studying it on the IRDA's portal, being a person from the insurance company, I thought there would be around 500 or maybe 200 or so. At 1,800 plus products being out in the market, means there is so much, and these are just the products. Your 15,000 becomes the right answer because each product comes with a rider. So if
Right.
I start multiplying those riders, permutation combinations will throw a 15,000 kind of a number. Now, just imagine a person who's meeting you as an agent with all good intention will also never be able to remember all those 15,000 combinations. It's not
Right.
humanly possible.
Mm.
So what he or she will end up doing is telling whatever he or she thinks is good for him or her. Because I've been in sales, I know when I would go and meet someone, I would generally have the product which is good for me on top of my mind because I think that's a genuinely good product. But that genuinely good product may not be good for you. So that's one. Two, what happens as an agent, and that you have to be very careful of, is that's only in insurance today, according to the regulator, not in mutual funds or any other savings category. That once you are an agent of a company, you can be agent only of that company in that category. When I say category, there is life, there is health, there is general. These three categories would have only one. So if to name a company, let's say if I'm a HDFC Life agent, I cannot be ICICI Life or a Kotak Life or a Tata Life agent. Therefore, when I meet Rohan, I cannot pitch any other competitor product. So I'll end up pitching my own product. Therefore, it's super important if you're buying from agents, meet agents of multiple companies if possible.
Right.
Don't buy only from one. But even before you meet them, if you are aware of the product features that you need, the agent, when he or she comes, you ask about the product features. For example, if it's a health insurance, does this have a room rent cap? If yes, what's the cap? Does it have daycare procedure? Yes, no. Pre-post hospitalization and multiple. There are 6-7 key features in a health insurance that your profile would need. You can ask those features, and then most probably the person will take out a valuable insight from the thing.
Got it.
And that's what you have to take care of when you're actually meeting an agent, and it need not be an agent, even if it's a banking RM. Today, bank RMs also sell, or a corporate agent also sells. They have got a wider range of, that's how the regulator permits. They have got a wider range. Again, they may end up buying, and this is nothing to do with them. It's a human bias. Today, if you ask Chat GPT about questions, sometimes ChatGPT may give better answers than you know of any smart person in your life, because the exposure of data they will have and the quick response time that they would have, human beings can't have that. So even if you meet the best of agents or best of relationship managers, there would be a human bias that will impact the decision.
So, Vaibhav, I want to now enter the last part of our conversation. And one recurring theme throughout our conversation has been that there is no like one size fit all kind of a thing when it comes to insurance. And interestingly, when Rohan and I, when we spoke and we thought that we are going to talk to you, we just went on your website and we were trying to figure something, and we stumbled upon this very personalized thing that you have called IHR, which you obviously will talk in detail. But the penny drop moment for both Rohan and me was we thought if Rohan and I fill any form that tells us about insurance, it'll be very similar. Because we thought, similar life stage, similar age, similar profession, similar revenue sources, similar dependencies, so to speak. So we thought same hi aayega na hum dono ka. But even we got like completely different personalized report. So I want to talk about this part as our concluding this thing, Vaibhav. It's personalized insurance goals, like how everyone has different insurance needs. What is the importance of personalized insurance recommendation? And what are you doing in that field? And how are you helping people crack this?
So this journey actually started, KV, 2023 April, when I was sitting and chatting with a few friends over a cup of coffee, and few of them were missold insurance within their family in January of 2023, in Feb of 23. And that's when I said, okay, let me start meeting my friends. And I was comparatively free and giving them tips on buying insurance and what to keep in mind. And that's when I realized that being a part of the fraternity, insurance fraternity for over 20 years, a lot of things came very naturally to me. So, for example, Rohan asked about pre-existing ailments or things to keep in mind when you're looking at 10 years, 20 years. These are but natural questions to people from our fraternity. So we don't even answer or think about it while we're talking to our family and friend. And that's when I said, okay, can I do a deeper dive in understanding what a common person thinks about insurance? And can we answer things related to what their questions are? That was the penny drop moment for me, if I may say. And in parallel, there was this AI revolution that happened. Yeah, and I ended up spending a lot of time on multiple platforms of AI to learn what's happening in the world. And that's when I said, okay, can I create something like that, which is very customized for each individual to understand their insurance in layman term? And that's when this thing came in. A lot of credit, actually, I'm putting only to those 3-4 months, but it was a journey of 20 years where I was a part of Macquarie, I was a part of Deutsche, I was part of ultra HNI banking relationships where we would meet our customers where net worth of 5 crore or more were our customer base. And before we would recommend an insurance, we would spend at least an hour, hour and a half understanding about who all are there in the family, what are the lifestyle, do they prefer golf over cricket, do they prefer rugby over other sports, and multiple other questions were asked. And then the profiler would be made, and then the recommendation would come. So I said, okay, let's make that, but I don't have to make it for them. I don't have to make it for a 45 or a 50-year-old gentleman sitting at a Bombay Gymkhana or something. I have to make it for a 25-year or a 30-year-old person sitting at Infosys, or someone who's sitting, again, a 35-year-old person sitting in some office in Bombay or Delhi or any other place, who hardly has got time to see a proper YouTube video, who actually prefers a reel or a short. Can I create something crispy, juicy enough for him? And that's where I, along with our team and everyone, made our journey, which is using a lot of alternate data. And in less than 60 seconds, which you and Rohan explored, finds exact profile of you and creates the recommendation engine. So if you go on our platform, do our IHR journey, it's a very simple, less than a 60-second journey, and it gives you in concise your report on what you should buy. We are not selling insurance. It's a free of cost report. We are not charging you a single rupee of creating this report for you. And the beauty is this report stays with you. This is a 6 month, because you had asked one of the questions, how soon should I review it? Ideally, you review your insurance in 3 to 4 years, but we say you can still review it in 6 months. So we ask people to come and review their IHRs every 6 months, but this IHR is there with you. Before you meet your agent, before you meet a banker, before you meet anyone, even before you think of buying insurance online, just spend 30 seconds to a minute on our platform, read about what your profile is, and then go and buy from anywhere. Like I said, I'm not selling insurance on the platform. There is no other catch that you have to pay me 500 rupee, 50 rupee, 5 rupee, nothing. It's an absolutely free tool. Aim is to educate as many people as possible, especially younger generation that's coming into the ecosystem and wants to finish their entire experience in less than a minute.
Wow.
I just love that you said crispy and juicy, which just proves that at this age, this generation is so constantly overstimulated on reels that even to get insurance, which is good for you, you need a crispy, juicy narrative to sell it to you. Nahi to nahi hoga. I love that.
Absolutely. I think now I believe Ron and I were, we started with saying that we are financially literate. I think some sort of a crash course we've had.
हाँ, फर्स्ट स्टैंडर्ड तक तो पहुंचे अभी,
First standard
ठीक
तक
है,
पहुंच
हाँ,
गए.
थोड़ा लिटरेसी हो गया. मेरा एक स्टूपिड सवाल है, बहुत स्टूपिड सवाल है, लेकिन ये बहुत सालों से केवी, I wonder this, something you have also wondered. ट्रैवल इंश्योरेंस खरीदते वक्त, ठीक है, होल इन वन इंश्योरेंस क्या होता है? ये हर ट्रैवल इंश्योरेंस पैकेज पे ये होल इन वन नंबर दिखता है मुझे. एंड सिंस यू ब्रॉट अप गोल्फ एंड रग्बी, आई वांट टू नो कि ये होल इन वन इंश्योरेंस क्या होता है भाई?
I am so happy because I had some notes and my team had said, this is an interesting one. Do discuss about hole in one. And I had forgotten, but thanks a lot. So hole in one is a very juicy, crispy, whatever way you would look at it. Insurance, if you play, I don't, but if someone plays golf and if there is a hole in one that happens in a club, the person who has hit the hole in one stroke is supposed to treat everyone on the house in the club. So whosoever is in the club, and that goes through the roof. So you get that insurance, especially the people who are traveling international, they would end up spending in dollars. Let's say you go to US or Canada. So that's the insurance of hole in one.
Aha. Okay. Got it.
Got it. Okay. I hope, like I said, Rohan and I feel we are slightly more aware when
It's
it comes to
slightly better
insurance.
decisions on the
Slightly
basis of
better
this
decisions.
conversation.
And I'm sure the audience which is watching it and just finished watching are also now sort of like more aware of things that you need to do when you're buying insurance for the first time or even second time or third time. I would urge you guys to check out Insurance Padosi. Take your IHR, like Vaibhav said, barely takes 40-50 seconds, 1 minute max, and then make your decision. We are not selling any insurance. Just go and check your reports every 6 months or something. Yes, Vaibhav.
This is super important,
Hmm.
which I missed out.
Hmm.
Rohan, you were talking about term plan. So I'll add one thing in the term plan bit, something known as MWPA, Married Women Property Act, which is one of the most underpenetrated, or even chartered accountants, lawyers, people, partner level people in large audit firms are not aware of, but a super duper important thing known as Married Women's Property Act. If you're buying any kind of life insurance, be it a product like a endowment or a ULIP or a term, you can, at the time of purchase, only at the time of purchase, you can use tick mark known as MWPA, Married Women's Property Act. Only people who are beneficiary of this can be wife and or children. Super important for this reason. If anyone is declaring bankruptcy, if anyone has a lawsuit against them, if anyone has got a will dispute later, this money can never ever be touched by anyone. Fun fact about it is Harshad Mehta knew about it. He bought 10 crores worth of LIC under MWPA before he was caught. Even when he was caught, his bank accounts were frozen, everything was stuck. He lived a lavish lifestyle because this 10 crores of 1990s, early 90s, could not be touched. So those 10 crores then would be worth around 200, 250 crores today. So imagine, that's the power of MWPA, which no one explains or talks about.
That's amazing.
Wow.
Wow. You just not only give us new information, you gave KV 2 new quiz questions
Yes.
for the next quiz.
Yes. Thank you so much, Vaibhav. Genuinely thankful. I know the life of, a startup founder and everything. 1 hour is also a big favor that you've done to us, because Rohan and I have nothing, like, being honest. To better the bus, but we have learned a lot. And you talked about quiz, Rohan, and I've been resisting. I'm seeing your frame. And I'm
Yes. How have you not asked me 10 questions?
I feel like we need to do a quiz very
Yes.
soon. So promise, I'll get you, Rohan, I'll get you, Vaibhav, maybe 2 members from the
Awesome.
channel, and do a quiz around business and finance, and we'll talk more about these things. But thank you so much, Vaibhav, for taking out time for us. And audience, if you're watching, we have put in the description below links to Insurance Padosi website. So go explore everything. And that's it, I feel. Thank you so much, Rohan. Thank you for
Thank you. Thank
taking
you for
out
having
time.
me. Thank you, Vaibhav, for your very clear and patient answers. Much
Yes.
appreciated.
Yes.
No. Thanks a lot, Rod. Thank you, VK.
Thank you.
Sorry.
Thank you, Vaibhav. Thank you, everyone. Thank you for watching.
Thanks. Bye.